Good afternoon, everyone, and happy Thursday. Thank you for joining me for today's edition of Self-Storage Unlocked. You can't control the market, but you can control how you prepare and react. With my special guest, Matt Beal. He is the Senior Product and Marketing Manager. Did I say that right, Matt? That's a mouthful of a title there.
Yeah, you're right on. Senior Product Marketing Manager. Yep.
Awesome. Well, thanks for joining us today, Matt. I'm super excited for this session. I think it's got so much great information for the owners and operators and self-storage industry professionals out there. So excited for you to share with us. Matt, if you can give us a quick 1-minute intro of who you are, what you do, who you work for, that would be appreciated.
Yeah, absolutely. So I have been working with Storable / Sparefoot. I was at Sparefoot before we were known as what we are now at Storable for about 5 years now. So that's how long I've been working in the industry. And so I've had a wide variety of roles from kind of our client success side of the house, and then now working on the product marketing side of the house. I've done a little partner management, so kind of worn a lot of hats. But other than that, I've been in the technology space for about 10 years before that. So that's pretty much where I've built my entire career and love that. So this kind of thing is super exciting to us, not only at Storable, but just me personally. A big part of my role is to kind of listen to the operators and specifically our clients at Storable to understand what they're thinking about, what they're caring about in the industry, what they're tracking, and then most importantly, what they're doing to kind of respond to those forces. And so a big part of our webinar series is focused on exactly that, just trying to provide a little bit of guidance and help people navigate the craziness that's going on in the industry.
Yeah, you guys had a really great series out last year when the pandemic hit, and I know you guys are just building off of that, same as what we do over at SBOA. So thank you for being a great resource provider for the industry. It's always much appreciated. All right, before we dive too far in, I'm going to go over just a couple of today's housekeeping items. You're live on our YouTube channel for the SBOA, so if you could go ahead and if you're not already subscribed, hit subscribe. If you have questions or comments throughout today's broadcast, go ahead and type those in the chat. We're going to answer all of those for you. We'll toss them up on screen so you can see them. And please, by all means, ask away. You have experts here on the phone with you today, or on Zoom, I should say today, or YouTube. I don't even know what platform I'm on anymore. I'm ready for Friday if you guys can't tell. But anyway, please put all those questions out there in the chat for the experts while we're here. If you like today's session, please hit the like button on the videos. All of those likes help us so much. And we want you to connect with us. So in the description of the video, all of the pertinent links that you'll need to get in touch with either me, Jessica at the Storage Business Owners Alliance, or Matt over at Storable, the Storable team, LinkedIn pages, Facebook pages, YouTube pages, Instagram pages, websites, phone numbers, you name it, it's out there. And we're going to start off with a couple polls like we normally do. We like to get some insight as to what's going on in the industry. So throw in the chat right now. 1, if you are a member of the SBOA, and 2, if you are not a member, but you're going to join today. And you should join. The SBOA membership is currently free. Not sure how much longer it's going to remain free. So get in while the free membership lasts. Come on, guys, put some answers out there. I see people watching. I know you can answer. 1, if you're a member. 2, if you are not, but you plan on joining today. All right, guys. All right, thanks, David. Somebody's out there listening and engaging with us. Please engage with us. We want to hear from you. Put your name out there if you want, where you're located, where your facility's located. We love connecting with people in the space. All right, next, Adam. Hey, Adam. Next question. Do you currently own a self-storage facility, or are you looking to own a self-storage facility, or neither? Sometimes we have vendor partners join us on these calls, or just people that are curious as to what's going on this particular channel. Lillian, you don't know if you are a member or not. We will find out, and I'll be in touch with you for sure. Matt, you are joining. That's good news. Hey, Matt, thanks for joining again. All right. David currently owns a facility. Let's get some answers out there. Who owns one? Who's looking to own one? Lots of new movement in this space. That's why we do these resource webinars. We're here to help new owners and operators, and even seasoned and vetted or veteran operators out there, I should say. Lillian works at a facility. I can't talk today, guys. I'm really ready for Friday. Lillian, what do you do at your facility? I would love to know. All right, next question. How many facilities do you currently own and manage? We're going to throw in some letters now to make this not confusing because of the numbers. A for 1, B for 2 to 5, C 6 to 10, D 11 to 20, or E 20 plus locations. Awesome. Adam's got 1 location. Or I'm sorry, I said that wrong. David's got 1 location. Craig Stern's got 2 to 5. Lillian's got 1. Awesome. And Lillian's a property manager. Thanks for joining us today, Lillian. Going to be 2. So you've got some movement. That's good. You've got some growth. There's lots of growth in this space right now. It's just crazy what's going on. Explosive growth. Get those answers in there, guys. Awesome. We'll move on to the next poll. How many average units are at your facilities? A, less than 200. B, 200 to 500. C, 501 plus. I'm telling you, tongue-tied today. Answer those polls, guys. Craig's got 501 plus. Awesome. Lillian's between 2 to 500. David, less than 200. Awesome. Adam, I know you're out there. Matt, I know you're out there. Answer those questions, guys. I think that's our last poll. Is there another poll? I think we're good. Awesome. Well, without further ado, and I know I said the last 2 weeks, I was going to stop saying that, but here I say it again. Without further ado, I'm going to bring Matt back on screen with us so he can get started with today's awesome presentation.
Thank you very much, Jessica. For what it's worth, I am also addicted to the phrase "without further ado," and I so I feel you.
I need a different phrase for sure.
All right. Can you confirm you can see my screen before we get going?
I think we are good to go. Screen is up and running. Let's go.
Perfect. Thank you so much.
You're
All
welcome.
right. Well, yeah, I mean, just to start off, I just wanted to thank everybody from the SBOA and Jessica and team for inviting us on for this. We're really excited to walk you guys through kind of our webinar series, or at least part 1 here. And so today we're going to be discussing some of the most impactful forces that operators are facing in the storage industry, and most importantly, how you can kind of position yourself or at least think about these problems so that you can set yourself up for success to address each one of these ones. But before I get into that, I did want to start with a quick introduction of Storable, the actual company itself, and kind of why we feel like we are the right company to help tell this story in particular. So, historically, the self-storage industry's technology experience was a really disjointed one. We have a whole bunch of vendors that offer a lot of really, really great solutions. But the problem is that there's so many different vendors that or operators were kind of left to patch all of those things together to create a technology solution that works for their business. And so our goal at Storable is to kind of help unwind a lot of that complexity and to be able to provide operators with a comprehensive, easy-to-use solution that just increases your revenue, that reduces your operational complexity, increases security for both you and your tenants. And so we have a lot of what I would call kind of legacy brands that a lot of people are very familiar with that all roll up to the Storable umbrella, such as SiteLink software and StoreEdge software and Easy Storage Solutions software, the SpareFoot Marketplace. We offer tenant insurance, payment processing. And so the idea is that by bringing all those together into one single solution, we can, again, make a really, really simple offering for our operators. They can run all of their business out of one single platform. But another one of our primary goals is to help operators navigate the self-storage industry and kind of provide them with the tools, the resources, and the insights that they need to position themselves for success. And so we see conversations such as today's webinar as a really critical component in that strategy. And so we kind of believe that we're uniquely positioned to help operators in that sense for 3 main reasons. First is the breadth of our client base. And so we actually work with over half of all of the storage operators in the United States at this point. So we have a really broad view through many conversations that we have with those clients to be able to understand how people are thinking about this industry and the challenges and the opportunities that are ahead of them all over the country. But we also have a ton of industry expertise. So, whether it's marketing or operational or data driven, we have tools and information necessary that really helps a lot of operators, again, navigate the space and kind of changes in the space. But lastly is volume of relationships. And this one is really topical for us today because SBOA is a really big partner of ours. But we have a whole bunch of industry associations and vendors and some partnerships where we're constantly having conversations with all these different folks to understand how they're thinking about the industry and kind of comparing notes with how we're thinking about it. And so all of these different conversations with operators and associations and vendors, et cetera, kind of all landed us to the conversation that we're going to be having today. And so we believe that most of the value in these webinars, though, ultimately comes, again, from connecting with the folks in the self-storage industry that are raising their hands and they're engaging. So everybody here in attendance is a really good example of that. And so we're looking forward to that kind of future collaboration. And we're going to be stopping it a couple times throughout today's presentation to answer some of those questions. So if you do have any questions, throw them in the chat and Jessica will jump in and just kind of flag them for me. And we can definitely stop and have a quick conversation as we go. But we've also got some time at the end saved. But before I get into the actual content, I did want to also just go with a quick personal introduction of myself. So we talked about it just a moment ago, of just kind of how I've been a product marketing manager here at Storable. But the piece I want to just double down on there is like, what is my job and what am I here to do specifically from Storable? And so I see my role as, again, working really, really closely with like our clients, but really all operators from all across the industry to understand kind of what their unique business challenges are, how they're thinking about responding to those kind of forces that are impacting the industry. And then ultimately, my job is to make sure that the Storable suite of technology actually helps you address those challenges and make your life easier. So again, this is something that I'm really passionate about. I really love getting in front of all you guys and being able to answer your questions, kind of deliver this info. So again, just get stuff in as you go. I'm glad to stop and give you a POV if I can. And if I don't have an answer for you, I'm glad to chase it down and follow up with you after the webinar. So
awesome.
So a quick question is, we actually got this with the webinar. So to Jessica's point, we did a couple of different webinar series last year, just kind of dipping our toes in the water to figure out what is the most type of valuable conversations for our operators. And so the question just became kind of why now and what now? Like what is this conversation that we're having today? And why do we feel like it's important to talk about what's going on in the industry? And so we actually believe that right now, the industry is in the middle of an inflection point, a really important inflection point. And operators that are forward thinking and trying to set themselves up for 6 months, 9 months, 12 months down the road are going to be much better positioned for success than those folks that are just kind of riding the day to day. And so I want to walk everyone through just kind of why we believe this inflection point is so important. Number one is the COVID-19 health crisis. So, this horse has been beaten to death. I'm not going to spend a lot of time talking about this, but what I think we would all agree on, and I think is important to remember, keep in mind going forward, is that this is going to affect how our tenants and how our managers and operators interact with one another and how we run our businesses for quite a while to come. So there's a lot of things that happened last year that were very, very tactical and immediately responsive, such as creating contactless experiences for the health and safety of our your own employees and your tenants. But also, in addition to that, some of the lingering things are things like consumers preferring digital forms of engagement. That's a thing that was mandatory during the COVID-19 health crisis, but now it's become something that is just going to be a thread that continues throughout kind of how we all run our businesses in the years to come. But we have started to see kind of a return to normal from that, right? So these adjustments and changes to the customer experience, they do continue to be important, though, as we continue to go through. And the market, most importantly, is continuing to evolve, right? So there are some macroeconomic forces. There are some storage industry specific forces. There are some kind of adjacent industries that we can look at that are similar to self-storage. And by looking at all of these things and understanding kind of what's changing and what we think is going to be happening in the near future, we can make sure that we are, contemplating what we need to do as operators to be able to position ourselves for success. And so this is actually part of a broader webinar series. We'll be talking a little bit more about kind of the next installments soon. But ultimately, our goal is to, no matter what is happening in the industry, what those most important forces are, we want to bring together the right groups of operators, subject matter experts, vendors, industry associations, such as the SBOA, onto different webinars to kind of discuss what we're all seeing from our unique vantage points and ultimately help each other succeed and really, strive in that next kind of phase of what the industry has in store for us. So So the natural question that you've probably been waiting on for a while here, what are those four market forces? What are those things that what are we currently tracking here at Storable? So kind of as I mentioned before, we have really regular conversations with a whole bunch of clients, vendors, industry experts, that kind of thing. And based off of all of our conversations we've had a whole team of people at Storable kind of come together to discern what do we feel like are the four most important things. And those are as follows. One is tenant shift to digital. So I mentioned this one in kind of response to COVID a moment ago, but there's a really large number of indicators that consumers are preferring, or really I would even say expecting, digital forms of engagement for your business. And so we suspect that this is going to likely be one of the longest lasting impacts of the health crisis. And so we'll dive deeper into that one in a moment. But number two is this idea of a supply crunch. So for folks that have been in the industry since 2015, you're going to be really familiar with what we're talking about. There was a really bad one of this in 2015 as well. But what we mean by supply crunch is that the storage market currently doesn't have enough supply to keep up with tenant demand. And so we're seeing really, really high occupancy rates, and it's kind of forcing operators to reconsider how they're optimizing their business. Number three is labor shortages. So I think this one is a little bit more immediately timely, but hopefully not long lasting. But it does seem to be lingering from the health crisis as well. It seems to be kind of a direct result, which makes sense. A lot of people lost their jobs during that time. And so it's really unclear kind of how that's going to play out. But we do know that it's affecting our industry in a variety of ways, including the cost of construction is actually a really big one. But it also affects operators directly if they're having, in certain parts of the country, there's a lot of operators that are having a difficult time staffing their facilities. So this is probably something near and dear to a lot of people's hearts here. We'll dive into that a little bit later as well. And so lastly is this concept of growth via M&A. And what I mean by M&A is mergers and acquisitions. So people that are purchasing existing facilities as opposed to constructing. And so this is one where we've seen larger operators and REITs in particular that are really growing their portfolios through this M&A activity, much more so than we've seen historically. And so we're going to kind of walk you guys through how we kind of see that playing out and why we think that is here in just a moment. But the first topic of conversation I want to go ahead and dive into is this tenants preferring digital forms of engagement. Excuse me. So look, anecdotally, I think this is one where probably more people can relate to, like very personally, more so than even some of these other items. And so to do so, all I would really challenge you to do is think about back to 2019 and asking, your parents or grandparents or friends or whatever, if they know what Zoom is, right? Back in 2019, in the fall of 2019, I think you'd probably get a lot of blank stares and a lot of question marks. But then how many of those exact same people did you stay in touch with throughout the health crisis via that way because you couldn't see them in person? So there's been a really, really big shift in the way that people are engaging with technology and digital forms of digital formats over the last year and a half. And so that's really important for our industry. And so I do want to dive in. What does this mean for our industry? So I want to take a look at a little bit of demographic data here. And so this is coming from the Sparefoot marketplace. And if you're not familiar with Sparefoot, it is a product offered by Storable that helps guide tenants who need storage with facilities that have units available to them. And it helps them find the unit that kind of meets their needs. So they have, with over 4 million reservations made to date on that platform, it is by far and away the single most accurate source of information when you're talking about prospective tenants in the industry. And so what you're seeing here in particular is year-over-year growth on the Sparefoot marketplace from essentially before the health crisis to during the health crisis. So essentially 2019 to 2020 is what you're seeing here. And so there's a couple things I want to point out. Is that one, the 18 to 24 crowd, and then as you see the 55 plus crowds, we saw really, really big percentage increases of usage of the Sparefoot marketplace. So for the 18 to 24 cohort, I think this is a pretty easy story to tell. And it is interesting, but it's also to be expected, which is that if you think back to the March and April months during the early phases of that health crisis, there was a whole lot of universities that had students going there that all of a sudden were having to shut down, and nobody really had a plan. And some places, even the dorms were being shut down. And so we saw a really big spike of kind of college-age kids booking storage units as they want to move back home during, as semesters were going virtual. But I think the one that's more noteworthy here, at least in my opinion, is that the cohort of 55 plus, the massive growth that we saw there. So these were cohorts that were hardly using any digital formats of engagement, according to our tracking on the Sparefoot marketplace before, and they've continued to do so not only in 2020 but throughout all of 2021. This wasn't a spike like the college event. This is just something that we are seeing these age groups use these digital formats. And so, as I kind of mentioned before, these digital transformations are happening all across multiple industries, though. And so, McKinsey & Co. is a company that recently surveyed a ton of consumers to just kind of understand the broader e-commerce experience. And what they've seen is across all different industries, there's been a 17% increase over the last 2 years in e-commerce usage. So what does that mean for the storage industry? It means that if we're not providing kind of an online shopping or account management experience for your tenants, and if you're just relying on things like walk-in traffic or traditional forms of advertising, then you're probably missing out on a good number of these people that are shifting over to digital and are going to continue to do so. So Jessica mentioned the webinar series we did last year. We actually have a webinar that we did on this exact topic, and we went much deeper. It was a full 30-minute webinar just on this one. Frankly, could have been even longer than that. There's a lot of really interesting stuff here. So if you do want to check that out, if you go to storable.com/resources, you'll be able to see all of our historical webinars, and the one about digital engagement preferences in particular is there in case you want to dive a little bit deeper on this one.
Yeah, Matt, I'll just echo you. The online customer is here. They're here to stay. They're taking over. I mean, the millennials, they don't want to get on the phone and talk with a call rep. God forbid they actually walk in and interface with a human across a counter at a facility. I don't think they would be able to socially handle it. I have millennial children, so I can joke and poke fun at that because of that. But yeah, digital is so important. Storable's got some great assistance on the digital front, obviously being a technology company. So please ask the questions or get in touch with this team to make sure that all of your digital footprint and everything that you're out there doing is sound.
Yeah, and it's funny you mentioned the way you did specifically there, Jessica, because you're spot on. We did a survey on that with our Sparefoot consumers at some point last year, and I'm not going to try to quote numbers because I will not remember them correctly, but It was fascinating just how many people were saying that they explicitly did not want to rent from the storage unit if they had to go talk to a person, right?
Oh my gosh.
We've seen a lot of shift in things like storage operators are starting to play with automation or going as far as unmanned facilities because they're hearing some of those things from consumers. And so it is definitely a forward-thinking thing right now, but it is very, very real. It is a shift that is happening quite aggressively.
It is. I mean, gosh, I even see, new technologies popping up every day to try to help support it. Huge shift there, big shift. I went and attended the SSA conference in Nashville, and Joe from Extra Space had a segment in his keynote about the online customer and the stats that are out there. And it's just wowing. Lower price point customer, but still capturing more of the share of the market for sure coming in.
100%. All right.
Awesome.
So jumping into the next topic here is the supply crunch. So what I want to talk about here is kind of more along the lines of some kind of macroeconomic and industry-specific data-driven conversations on kind of the market forces that we're seeing here. And so kind of from a high level, there's a number of reasons to believe that we're going to be in the supply crunch. And again, meaning just supply is not going to be able to keep up with demand for at least the next year, if not more than that. And we'll go into why that is here in just a moment. But again, we're expecting something very similar to 2015, where a lot of operators were seeing 90+% occupancy on a very regular basis. A lot of people even seeing higher than that, right? Getting up to 95+ kind of range. And so this was also compounded, though, by something else that I think is interesting, which is that, just a few months ago, if you start thinking about when the vaccine started rolling out and we started seeing businesses open back up, I think the storage industry, the kind of vibe was that people were thinking that people that were moving in during the health crisis were going to start moving out, and they were going to start returning to their lives normally, and they might, start purchasing bigger homes, or they might start moving, which we knew a lot of people stopped moving because, there wasn't a lot of job availability. But we didn't see that. We've seen that a lot of people have, continued to stay in their units, and demand has continued to stay as high as it always has. And so that it's a really interesting dynamic on what we're seeing in the industry. And so kind of the first metric I want to look at, just the most obvious one, is occupancy, right? So in particular, I want to look at what occupancy percentages have been like over the last couple of years. So as you can see here, 2019 going into 2020 was actually a pretty steady amount of growth year over year in terms of occupancy percentages. But the storyline is clearly 2021. We're seeing a really, really big spike in what the facilities are, how many people you've got there in your facility. And so far that is just being blown out of the water. Now, what I will say is I don't have clean enough data to where I could show this just yet. But one thing we're tracking and looking at Storable as well is that this trend continues both in kind of the overdeveloped and underdeveloped regions of the US. So we break this up in a lot of ways, looking at kind of West Coast, East Coast, up in the Midwest and the South. And you can see that these trends on occupancy are basically the exact same across the whole country. So it doesn't seem to be a regional thing. This is just something we're dealing with everywhere. And so naturally you would expect operators to raise their prices in response to this, right? So if you're at full occupancy, then you want to go ahead and raise your prices to either start getting some older tenants out who don't want to pay that new price, or at least capture as much as you can for new people and your street rates. And we are seeing exactly that. In fact, you can see in April, May, June, you're seeing a much more linear, explosive growth rate of price per square foot than you're even seeing on occupancy. And that doesn't seem to be slowing anything down. So it doesn't seem like there's really an end in sight. So this is really interesting. And so what we would expect to see is that if occupancies are high, rates continue to raise, and occupancies stay high, well, traditionally, that means that operators would start to build additional facilities to meet that demand, right? And hopefully they would have been building way before you got to that point so that you can start to capture and get a lease up going real quick. But there's kind of a number of reasons that we haven't seen that be the case here in the industry. And so one interesting data point I just wanted to share is, according to the National Association of Home Builders, that's a mouthful.
It is.
I know, you think my job title is.
Yeah.
Is that, there's been a 300% increase in the price of lumber and steel. Now, in particular, I know lumber has come down pretty significantly over the last 60 days. So that's a good thing for us. Unfortunately, in the storage industry, steel is the one that we care the most about whenever we're talking about building new facilities. And there hasn't been a lot of relief in that space. So this puts a really big strain on construction budgets, especially those that were already in flight there. And we've seen a lot of people either pause or pause those projects as a result. And we definitely haven't seen a lot of new projects being built. There are some exceptions to that in the larger operators and kind of REIT space who are continuing to push through. They see the value in that. But especially in kind of the middle tier and the lower tier of the industry, and just by size, we've seen a lot of those projects pause. It's also worth noting that there's a lot of pent-up demand in the residential sector for some of this stuff too. So it's a competing thing we're seeing across a lot of different industries. It just happens to affect the storage industry as well. So how do we respond? That's ultimately the most important question. And so our kind of next follow-up webinar next Friday is going to be a much deeper dive into this. And so again, we'll share some links if you guys want to kind of dive deeper into how can you respond to these high occupancy percentages and still continue to grow your business in this new environment. But it's really, really important that you're thinking about your business in a fundamentally different way, because the same playbook that kind of has brought you success from 2015 to 2020 is not going to be the one that is going to be bringing you success from 2021 to 2022. And so there's a few reasons for that. One is that we've seen that for the sake of simplicity, operators have been very, very fortunate that they can just focus on this one kind of key metric and occupancy to be able to really have a lot of success in your business and continue to grow that. Unfortunately, though, that doesn't hold true. As you get to 90, 95+% occupancy, you got to find other ways. And so kind of as our North Star going forward, we recommend that operators are focusing on either a revenue per square foot, a revenue per tenant, or a revenue per unit model. But ultimately, the point is that you're kind of bringing it down from occupancy and thinking about it on a per some sort of unit model, no matter how you kind of want to think about that. And this is the best way that you can continue to grow by, again, when you're at full occupancy, because it starts to give you opportunities on your entire existing tenant base and identifying ways that you can create incremental revenue for those folks. So one of the most common examples of that, and we kind of discussed that just a moment ago, we saw this on the macroeconomic trend, is that you can increase unit prices. But the reality is there's a whole variety of other ways that operators aren't taking advantage of like providing valuable services and merchandising and retailing and et cetera. But that's going to be one that we don't go down the rabbit hole today. That'll be in a follow-up webinar next Friday where we really dive much deeper into what each of those things are. So if you're interested in that, like click on that link and give us register for the webinar. We'll send you some emails. We'll get you all the resources you need, and we'll continue the conversation on this here pretty soon.
Awesome. Thanks, Matt.
Yeah. Any questions on that section come in, Jessica?
No, not of yet. Guys, you're live here with Matt and I. Please throw those questions out there. I love what you just shared, Matt. I mean, we are seeing so many operators that are close to 100% occupied all the time. So we're constantly having conversations with them about assessing their rates, increasing rates, what the best strategy is to increase rates. Somebody asked me, do I just push somebody street to street rate? That's not necessarily fair. Probably should do it percentage based, because God knows how long that person has, been renting at that facility. So looking at the rates is definitely a critical piece in this process as the demand shortage. And then, gosh, I saw something the other day. Not only are the building materials, on severe back order, and we've got supply issues there. I saw even where disc locks from certain lock providers were like 6 to 8 weeks out just to get disc locks. So, yeah. I mean, it's definitely trying times in some scenarios. So to be the most proactive and forward facing on that, get involved with, conversations like we're having here today to try to figure out the best strategy.
Yeah, I hadn't heard that one, but that makes a lot of sense. I think the other point I would just mention is, thinking through your existing tenant rates and your prospective tenant rates is definitely a key part of it. I would even argue the most important part of it. And I like a lot of what you're saying there, Jessica. I know we get a lot of objections about the storage industry very much is a localized industry where we're thinking about serving our communities, and we don't want to be unfair to them or leverage a too high of a price increase, and totally makes sense. And so it's being smart about how you do that is very important. The other thing I would add along those lines is there are a variety of ways, and so I'll just pick on one, for example, but tenant insurance, for example. We've heard so many horror stories about how people, if God forbid something does happen and they lose their stuff, for example, that, they're just kind of left high and dry. And it's really, a lot of times the stuff people are storing in storage, even if it's not monetary value, it's just something that they would never be able to replace. It means a lot to them because it was given to them by someone in their family, et cetera. So there are ways that you can also provide kind of incremental revenue to your business while providing a valuable service to your tenants as well. So it's not all about just how you're increasing prices, although that is part of it, but it's also about kind of giving that value exchange back to your tenants and for the same thing.
Yeah, absolutely. Actually, Matt, a question just came in. This one's a little bit long, so let me try to either paraphrase this or get this out verbatim. So with Sparefoot, the way I understand it, and this is coming from Craig Stern, I apologize. With Sparefoot, the way I understand it is you have to pay for a month and a half to Sparefoot, but if the client moves out in a month, we are in a losing position. Is there another format that Sparefoot is looking at or that exists that would not put the self-storage facility in a losing position if the tenants moved out earlier?
Yeah, that's a complex one in terms of unraveling everything. I would say to that. The one thing I would focus on in particular is while that is a situation that can occur, it is a very, very, very rare situation. And we've looked at, we've made 4 million reservations and looked at this data in aggregate many times. And for what it's worth, if you're concerned that that's happening at your facility, you can contact the Sparefoot team, and we are more than willing to engage with you and to be able to pull some of that data and understand kind of what that average tenant length of stay is. But what I would say, and I'm about to quote a pretty old study, and what I old is 2 years old, but in the data world, that's very old. But I haven't been working on the Sparefoot marketplace in a while, so pardon me, I've got my limited expertise from a couple of years ago. But what I would say is when we've done studies on this exact thing before, we found that the average Sparefoot tenant that moved in stayed for 11 months. And that's excluding the extremes on both ends. So the people that might stay for just a month or people that stay for 4 years. We pull kind of that extreme sets of data out and just get a good read on what your average tenant stay is. And we found that across the entire industry, out of all 4 million plus reservations, that we were looking at about 11-month length of stay. So while one situation can be painful, and we acknowledge that for sure, if they move out after 1 month, you probably have at least 5 or 6 people that stayed there for 5 months, 10 months, 11 months, 12 months. And so To answer your question directly, no, I'm not aware of anything in terms of, the current thinking on an adjustment to said pricing model. I don't even want to suggest that I would be. But what I would say is that in aggregate, we find that our operators are making significantly more profit off of it than they are cost. The return on investment is really, really noteworthy.
Awesome. Thanks for your response, Matt. That was a great response.
Yeah. Very good. All right. Well, I will jump into the next section if there's nothing else, Jessica.
No, I think we're good to keep moving on.
Let's do it. So from a labor shortages standpoint, we talked about this just kind of a moment ago in terms of how this is affecting the supply crunch element of things. But we've also been seeing just labor shortages across a whole wide variety of industries. So I kind of want to zoom out for just a moment. And so what you're seeing here is that kind of in the worst point of 2020, during the middle of the health crisis, the US had lost over 22 million jobs. That's a lot of jobs. And so restaurants, retail, those kinds of places, those kind of in-person interactions were definitely hit the worst. And I would also add the storage industry was very lucky, or at least fortunate, to have been classified as essential across most of the states across the United States. So a lot of people were able to remain open and continue providing that valuable service. And so this did help, storage employers retain their staff throughout the health crisis. But it is noteworthy for a couple of different reasons that I want to get into. Oh, all right, I was on the wrong slide. All right, so if you take a look at kind of these aggregate trends here, right, what we have seen is that since that big drop of millions and millions of jobs, we've seen that the U.S. economy has added about 559,000 people back to payrolls this past May. And pardon me, I don't have data in June and July. This is kind of the most up-to-date, reliable source I could find. But what I do think is interesting about this is that by contrast, the Dow Jones, which houses a whole ton of economists who are kind of, focused on predicting these types of things and labor trends, they thought that that number would come in closer to 671,000. So that's a pretty big miss. Oh my goodness, that is a pretty big miss. There we go. Mm-hmm. So that's about 100,000 jobs less. And so we don't think this is doom and gloom by any means. And in fact, I know for that we've kind of seen this pick up a little bit more closer to trends recently. But it does just seem like this is going to be a slower transition kind of back to work than we originally anticipated. And there's a whole bunch of reasons for that. I'm not going to get into all of them today. Frankly, a lot of them also get into the political scape, and there's a lot of different people that have different opinions and whatnot. But this is definitely something that affects us for a few different reasons. And so I want to go quickly transition now into kind of our last topic for today, which is this concept of portfolio growth through mergers and acquisitions. So this is something that M&A activity in particular is something we've seen that has spiked in the self-storage industry well before even the health crisis. It's been like 1.5, almost 2 years that we've seen this really, really big spike here. And in the context of all the different forces that we've been discussing today, all the different market forces, it makes a whole lot of sense. But I do want to illustrate just kind of how big of a trend this is in the industry. So you don't have to look very far to understand some of these big movers. Public Storage, which is by far the world's largest owner-operator of self-storage facilities. In the first quarter of 2021 alone, Public has invested $2.3 billion to purchase 87 stores to add to their portfolio. That's a really big number, especially if you've been in the industry for a while. To see that those kind of cap rates that we're seeing on these sales is really noteworthy and interesting. And people like Public continue to do it even at those cap rates. So it is worth noting as well that kind of in their investor call, when they were asked where they're financially focused in 2021, they said both same-store revenue and same-store NOI growth were top of mind. So if you recall back to what we talked about with the supply crunch and focusing on a revenue per tenant or a revenue per unit model, that's exactly where they're focused. So if that's how they're thinking about their business, that's probably how we should be thinking about our business too in the in the different part of the industry. But going back to M&A, I want to discuss a couple of different reasons. Here we go. All right. So first is construction costs are significantly more expensive than ever. And so larger operators and REITs, they have kind of continued to push forward here, but even then they're doing it at a much slower rate than they have done historically. But we're definitely seeing a lot of the middle of the market and the lower end of the market that is entirely pausing or just hitting, stopping their kind of investments in new construction right now. And so M&A becomes a really, really obvious driver of growth for them. If they're not going to build, then they're just going to go buy someone else who's looking to get out of the industry. But the other thing that I think is really noteworthy is just how resilient this industry is. So for folks that have been here for 15 years or so, we've got three really, really big, compelling data points that you can point to just talk about how good of an investment this has been. So if you look at the 2008 recession, if you look at the 2015 supply crunch, and then if you look at the 2020 COVID-19 health crisis, all three of those events affected a lot of adjacent industries really, really hard. And so the one I would point to in particular is this past year during the COVID-19 health crisis, our friends in the commercial real estate space got hit really hard, especially as a lot of companies are starting to transition into working from home and they're not investing in that space anymore. And so storage has become this kind of beacon that a lot of these investors are looking to. And so there's a lot of new people that are coming to get into the space through M&A as opposed to, learning how to go build a facility from the ground up. And so for smaller operators, this presents quite a few of opportunities for you. And there's kind of two main ways that I think about that. So for the folks that have a healthy amount of institutional knowledge, that have been in this industry for a few years, know how to run it, know how to respond to market forces, you're going to be positioned really, really well to compete against those new entrants who might not be. So things like the supply crunch, for example, if you know that when occupancies are high, you're moving your rates up, you're offering tenant insurance, you're really pushing your managers to provide these valuable services, that's something that they're not going to be familiar with. And so you'll have an opportunity to really shine against those other competitors that are just buying and moving into the space. But second is that if you are considering selling your facility, the interest to purchase has never been higher than it is today. So we just talked about the public storage, but again, there's a whole bunch of different transactions we can point to just see how big the growth has been here. And so by focusing on your facility's NOI in particular, or net operating income, NOI, you're positioning yourself to make sure that you're getting a good price when doing so. So how do you do that? Again, the supply crunch stuff we were talking about. If your occupancy is high, you got to make sure that you're capturing as much revenue per tenant as you possibly can. All that's going to trickle down to your bottom line. And then you take that with your cap rate, you're going to get a much better price than what you would have done otherwise. So kind of no matter if you're looking to sell or stay, that's kind of the playbook that we see as the most important for especially the next couple of years as we wait for construction to kind of catch back up and to be able to meet tenant demand.
So Matt, I'll jump in and ask you a question from us. Do you feel that this M&A will eventually slow down, or this is going to be the new normal in this space right now with the building, the crunches in the building, supply issues, et cetera? Because we see a ton of M&A activity on the SBOA side. We also see way more conversion projects than actual ground up projects, old Kmart's turning into self-storage facilities. So yeah. Give me your best predictive answer on if you think it's here to stay or not.
Yeah, so I will hedge my answer just by saying the smartest person in the self-storage industry, I don't think knows the answer to that question. Right. And I think that's important for a few reasons, because the reality is if you were to talk to somebody from a public storage or another REIT or whatnot, but what they're going to tell you is that they are constantly tracking how things are shifting day over day over day over day. They're not, they don't have a playbook of what it's going to look like in 12 months. They're making their best guesses based off of information they're getting all the time. So what I do think is interesting is well, I didn't go deep in this in the webinar, but the construction costs or the construction issues are actually really, really interesting for a variety of reasons. The costs are there, but what is underpinning the costs is actually often labor shortages or labor issues. So what we've seen is that a lot of folks that were traditionally working, for example, in the steel supply chain, maybe they had a high skilled job, working with steel and manufacturing what we then use to create our facility. During the health crisis, a lot of those folks found other different gigs or other opportunities or home contracting work, because a lot of people were, working on their homes and they were able to make more money than what they were doing there. And so it's hard to say exactly when or if a lot of those supply chains and those labor forces are going to recover. Not an if, but when. It's definitely a when. It's just how many years is that going to really take? And so I think based off of understanding when those things start to recover is then going to be, it's all the domino effect. And so it's as those things recover, construction costs get better. As construction costs gets better, storage operators start building more, but that takes, potentially years to build a facility. And so it's all just kind of one of those things where the off of what we're seeing today, our best guess is that it's probably at least a couple of years from now before we really start seeing the full swing of the construction recovery and therefore an M&A maybe slowed down. I think the other thing is, again, no one really knows the answer to this one either, but we've seen this in the retail or in the consumer side of things as well, the residential side of things. It's like house prices, right? And markets are going crazy. Same thing with the self-storage industry. We've seen cap rates so good that people just, why would you not sell kind of thing, even if you're kind of contemplating. So we've seen that a lot of people are selling to other new entrants. And to your point, a lot of people coming in that way. And so I think that continues to make sense, especially for the larger operators today who can at scale get a lot of benefits from, running one playbook for 200, 300 facilities. But so I just think there's a meet in the middle where that construction starts recovering and the M&A starts to make a little less sense based off of how much you're paying for it. And wherever that meets, again, best guess, maybe a couple years, 3 years from now, we start to see that normalize. But I definitely don't think, even when it normalizes, I don't think it stops by any means. I think we're going to see a lot of M&A in this industry for quite a while. I think the secret's out of the bag in terms of how good of an investment this is.
Yeah, I mean, we've seen it traditionally the past 12 years, just the SBOA has been around. I mean, the brick and mortar doesn't go away, obviously, but we've been through various ownership groups on certain properties, just even throughout, like I said, the past 12 years that we've been around. Mm-hmm. If I'm remembering correctly, too, I was on an interview with Raheem from Devon Self Storage. He's their VP of operations. I think one of their properties that they recently acquired, they got at a 1% cap rate, which is just crazy. So crazy stuff going on out there for sure.
Yeah, that is unbelievable. Yeah,
it was for sure. Very, very low.
Yeah.
Awesome. Well, Matt, I'll ask you another question. Do you have more to go?
No, I've got just a summary of what we've discussed. This is a great time to stop and answer questions for sure.
Yeah, if anybody from the audience, if you have questions, please go ahead and put those in here. So Matt, you went over 4 really critical market forces. I know that the Storable team throughout your series and trajectory of your own webinar series is going to take a deeper dive into each one of those. Tell me which of these current forces you feel is the most important for an operator to focus on today.
I'm going to cheat and I'm going to give you 2. Is that okay?
Yeah.
But it's like 1A, 1B.
Okay, there we go.
so as I think about it, I'll explain all 4 and how I kind of think they fit in. But I think growth via M&A is interesting. I think if you're looking to sell or if you have a lot of people entering your market that are buying, then I think that's interesting for you. But I also think there's not a lot you can do. That's kind of a slow moving thing. Labor shortages also just kind of feel out of our hands in a lot of ways, right? And so I don't think that they're very important for us to keep in mind and the way that we then think about growing our business or whatnot. But I think most importantly, what are the 2 things that operators could walk away from this webinar and they could go make changes today if they wanted in their facility management software are going to be the number 1, number 2, the tenant shift to digital and the supply crunch. I think these are where we have the most control and power of as operators. And I think that these are the ones you should be really focused on and just making sure you're kind of, sharpening your pencil and going back to the basics. So the reason we picked supply crunch as our first kind of deep dive. So I have 2 webinars lined up on this topic. One is next Friday, we're going to have a deep dive on supply crunch where we just really talk about what are the individual products and services and valuable ways that you can, help your tenants out while still growing the bottom line. Is that again, that's pressing. That's very important. We just saw that a moment ago, how high occupancy percentages are compared to 19 and 20. So that's something that we need to be thinking about right now. And so we're also going to be hosting an operator roundtable 4 weeks after that. And what I mean by that is we will host typically 3 operators who are focused exactly on the supply crunch and are doing a really phenomenal job at managing that. And they've probably been thinking about it for at least a year before today, right? Because they're tenured, they know what to look for. And they're going to walk us through and provide some really, really great best practices and strategies on how you can actually go execute on improving the way that your business responds to these things. So I think that's the most important one. And then tenant shift to digital is just, Jessica, we went on a kind of a long discussion on that just a moment ago in the webinar, but it's like, this is one that feels kind of ethereal to people. It's hard to measure the impact to it, but it is so mission critical. More and more people are doing this. There's a quote that I love so much that's from Satya Nadella, that is the CEO of Microsoft. And during his investor call, I want to say it was April or March of last year, but it was right in the early days of the health crisis. After about a couple months had kind of gone by of the world kind of slowly shutting down. he had said that, we're seeing essentially 2 years worth of digital transformation in 2 months. And that's such a powerful quote, and it means so a lot. And so if you think about it, the CEO of Microsoft, how much data he has to prove that, right? He's got all kinds of different services that help companies work remotely. He's got all different services that help consumers just stay connected in their personal lives. And just the massive amount of engagement that he was seeing on those different platforms led him to make such a powerful statement, right? They were seeing literally 2 years worth of growth from Microsoft's key metrics that they would expect to normally see, and in 2 years, they saw it in 2 months, is what I'm trying to say. So the self-storage industry is not immune to that either. So I would say those two, the tenant shift to digital and supply crunch, are like by far the most important.
Awesome. Thank you for sharing that. And yeah, I would agree. I mean, I even know once COVID hit, there were technology companies that had different softwares and hardwares already in development, but inject COVID pandemic into the US, hit the accelerator. Everybody had to pick up the pace, and maybe they were still, 6 months to a year or longer out from full development on certain product lines. And they got everything pushed out within, 30, 60, 90 days to get it to market because the need was there. I mean, everybody had to go unmanned at that certain point instead of having, physical people at the facility. So
yep.
Great, all kinds of crazy stuff. Well, Matt, I think you probably covered it so well that our audience doesn't have any questions, which bums me out. Guys, I see you out there watching. If you have the time, you have an expert here from the Storable team that is here to answer questions. And then again, the link for next week's webinar with Storable is in the description of this video. I also put it in the chat. You just need to copy and paste it and go to that link so you can register. I attend Storable's webinars. They're always lots of great information. I love when you guys do the operator roundtables. That's actually how I met some operators, were through some follow-ups of meeting them virtually through those. So always great content that you guys put on for us. Ken said, thank you very much for today. Yes, Matt, I will echo Kent and say thank you for joining us and carving some time out of your schedule. And if you've got some closing comments for the audience, go ahead and give them to them now.
No, I think we're good. I mean, the only other thing I would say is a lot of times we find, you kind of kick yourself right after you leave these because you're like, oh man, I do have a question, and now I don't have a chance to grab him. My email is obviously in the description of these videos, as well as Jessica alluded to at the top of the call. Feel free to reach out to me. The other email address that's a lot easier to remember is just webinars@storable.com. That also goes straight to my inbox. So if you guys do have anything that pops up, you have any other questions or whatnot, feel free to give me an email over there. Even if it's something I can't answer, I can definitely connect you with someone at our team that can, and we can get you the right resource. So I'm glad to help you guys. But yeah, thank you, Jessica. Appreciate you having me on today.
No problem. And Matt, remind me real quick before we wrap up, you guys will be meaning Storable, your team will be at the upcoming Self-Storage Association event in Vegas, which is just 2 weeks away. We will be there as well. We are at booth 130. Remind me what booth number you guys are. Or do you know?
We will definitely be there, yes. But I don't know.
You guys can't miss Storable's booth, okay? I'm just here to tell you, when I was in Nashville, I walked into the expo hall. You guys were the very first one, and it stopped me dead in my tracks because it's so impressive. Your team did a fantastic job designing that eye-catching booth. It's lovely.
I agree. They're phenomenal at what they do. We appreciate it.
Awesome. Well, thanks everyone for attending. We have 2 quick announcements before we wrap up today. I'm going to let our producer Alec take over. Again, like I was just saying, join us at SSA. We will be there meeting the Storage Business Owner Alliance at booth number 130. If you come to our booth, we have free 5 to 10 minute chair massages. So while you're getting a chair massage and relaxing, because those days are long for anyone that has been to these events, we want to help you get relaxed and ready to absorb all of the great information, all the great networking and connections that you can make out there. And then we have another announcement for an event that the Storage Business Owners Alliance is producing coming up on November 3rd that we hope that you can attend. Registration details will be released on September 15th, which is a couple weeks away as well. So stay tuned for this event and event announcement.